We will start with the Pledge of Allegiance. Pledge allegiance to the flag of the United States of America and to the republic for which it stands,
one nation, under God, indivisible,
indivisible,
with
with liberty and
justice
justice
for
for
all.
all. All right, thank you. Okay, now we'll do a quick roll call. Bernie Kraus,
Here.
John Gebhardt. He's here. I saw him on camera.
Here.
Michael Schaefer. Let's see him. Mark Mayer is not able to join us. Vincent Susie.
Here.
Dominic Prestipino. Eric Nelson.
Here.
Mano Brameo. And Zeke. We see your smiling face, so we know you're there. So I apologize for being remote today, and hopefully you can bear with me on that, and we'll make do with that. Now, first, we need to adopt today's agenda. Do I have a motion to do that?
I move that we adopt the agenda for today.
Have a second?
Second.
All right, all those in favor?
Aye.
Aye.
All right, the agenda is approved. Also, I have sent meeting minutes from November 3rd and December 7th that Bernie had compiled for us, and I'd like a motion to approve the November, well, but we can approve, I think we'd probably approve them jointly unless there's specific issues. Does anybody have any issues with the draft minutes? I looked them over and they look fine to me, captured what we talked about.
Move that we accept the minutes both for November and December.
Can I have a second? Can I second it?
Second.
All right, all those in favor?
Aye.
Aye.
Okay, thank you. All right, first item on our agenda is to review the Brown advisory reports. Sean Futch was going to join us from Brown. Did he join us? I can't say. Yep, there he is. All
Yeah.
right. So, Sean, with no further ado, why don't you take it away?
Absolutely. Thank you, Iris. Let me try to share my screen here. So let me know when you're able to see this.
We can see it.
Yep, thank
Okay, perfect. Thank you, Paul. Well, good afternoon to the committee. Always good to be here and connect to you all. I'll try to keep things brief and kick things off, rolling through this agenda to highlight economic and market update, pivot into refreshing some of the key elements of the investment policy statement that's in place currently, answer some questions and walk through this key analysis in some of the broader active passive context, and then ultimately kind of nail down this update on the portfolio. So to start, I think it's important we kind of highlight where we were in 2025. And so last year was a really strong year writ large for risk assets, despite the sharp drawdown that we saw in April at the hands of Liberation Day, or all of the tariff policy that really pummeled headlines during the spring. And so in this top left, you can see kind of across major asset classes. You have the MSCI equity in orange, which really highlights, that international performance outside the U.S., blue highlighting the S&P, and then green, last but not least, highlighting that core fixed income exposure. But to kind of start here domestically, we ended the year with nearly 18% returns, which was largely buoyed by continued optimism around artificial intelligence. And then we layered, some of that positive gain with, continued easing by the Federal Reserve, totaling 75 basis points worth of cuts. And then lastly, a pretty resilient labor market. But I think it's important to note the market leadership that we saw remained pretty narrow, and we saw, less than a third of the S&P 500 stocks be able to outperform the index. And the top 8 contributors, largely all the tech hyperscalers that have driven markets the past 2 or 3 years, continue to drive more than half of the index's gain. But outside the U.S., we saw equities do even better. And so looking at that MSCI ACWI number, the top left there, we were able to capture across markets 32.5%, which was in large part aided by a weaker dollar, but wasn't completely the sole driver there. And so there were governance reforms happening globally in places like Japan, increased defense spending, particularly across European markets. And then, other central banks were cutting rates at the same time as we were here in the States. But I think 2 structural dynamics really matter kind of heading into 2026. And I think the first piece is that, that concentration, although we've seen some broadening, remains at the top of these extremes that we've seen historically. And second, we continue to see that relative value improving abroad, particularly in places, across, Asia and Europe, while we see those high-grade, high-quality bonds continue to offer real yield across, intermediate duration, which is what we have here in the portfolio, just kind of given lingering inflation and some of the fiscal concerns that are out there for us, domestically speaking. And so just to pivot for a sec, I think it's always helpful to really highlight, what the guardrails are. And so the IPS, was precisely that. And so I think the biggest thing here is understanding kind of how we're allocating, across both the short and long-term portfolios, which are both conservative in nature, just kind of given, the needs and the use of the cash for the town. And before we get into the portfolios, Iris and I had a conversation last week, around fees. So I thought it was really prudent of us to try to be as transparent as possible around where things stand and ensure that, everybody's on one accord here. And so, as of year end, the town's, total market value for, all portfolios was $7.1 or so million. And the expense on those assets is just over 1%. And so kind of doing a further look through here, I think the biggest question is always kind of what is the investment advisor, pulling down off the assets. And so we're seeing just under 70 basis points or so. And that, essentially is for, the portfolio management, strategic advice, and relationship service that we offer the towns. And then I think the next thing is going to be custodian fees, which really boils down to kind of the safekeeping of these assets, settlement on trades that they handle, and then supporting some of the reporting, the statement access that we get from U.S. Bank. And then beyond, that, you see, the expenses from these underlying fund managers across, the portfolio. And so I'll pump the brakes there. Are there any questions on this full fee picture before continuing the presentation?
Well, I think just the one area that people were concerned is, would there be a way to potentially reduce the fees? And what you had told me would be to go to, more of a passive approach, but then that would, I'll let you just respond to it, but my words that I got out of you is that would limit our ability to react quickly if something happens. Is that correct?
Yeah. So you're on the money, Iris. I think the biggest thing around the active versus passive conversation is that while passive strategies tend to be the most cost efficient, they don't always kind of get you where you want to go in terms of exposures and quality, as it's kind of the broad bucket for insert investable universe or asset class. And so, cost is a necessary but not the sole input around the decision making as we're kind of building or constructing portfolios. And so I will say, the Dewey Beach manager lineup blends these ultra low cost exposures like the S&P 500 ETF, which we see highlighted in blue here, which costs us, 3 basis points to hold. But then on the other side of the coin, there are active strategies that we allocate to in areas, where we see selectivity really adding value. So a space like small cap, for example, we're allocated to sustainable small cap core funds, but looking through a quality lens, what's really driven the index have been companies that don't have any earnings, and so there's a lot of speculative investment happening within that asset class that we don't necessarily want to be overly exposed to, just as part of our risk mitigation approach. Europe is another place where we'd want to have active management as opposed to all of the noise that we could capture or have exposure to using the index. And so I think that hybrid approach overall really aims to control the fees at the total portfolio level, but also kind of diversify manager risk and target, for the most part, those improved downside characteristics, and maintain a level of consistency across cycles. So I'll stop there, but does that answer the question clearly, or would it be helpful to kind of dig a little deeper? Go ahead, Paul.
Yeah, what was I'm trying to read this chart here. So the total fees we paid you guys to manage our portfolio was $76,000?
So that doesn't all go to us. So Brown Advisory is capturing this account level management fee.
49,000 of it, right?
Yeah. Or the 69 basis points, kind of doing that look through there. And then all this, for the most part, you got custody fees in there that go to U.S. Bank. But the bulk, of this outside of the management fee at the account level is going to the respective managers, allocated to, across the short and long-term portfolios.
Good boy. Good boy. Good boy. Yeah.
Seems to be a big number. That's my only comment on it.
This is Bernie. I don't think that's a very big number.
No?
Based on the
Okay.
fees that I pay.
How is that different than last year? I don't know if you have that number handy, but if you could get back to us on it. How much is it grown, or is it pretty much level?
So I don't have the 2024 calendar year total expense handy, but it's grown. That figure, well, all the fees have kind of grown in lockstep, essentially, with the portfolio's growth. So as this total market value has increased,
Yep.
you've kind of seen this stuff move in proportion with that.
Okay.
So no incentive or anything where we're getting a
Percentages have stayed the
huge
same,
lump.
but the number's grown, right? Okay.
Correct.
Right. Anybody else have any other questions? All right, I think we can press then. Thank you.
Absolutely. Thank you.
Oh.
Zoom out, scroll. There we go. So onto the portfolios. I think it's always helpful to really provide, a snapshot of where things kind of stand in terms of figures across each of the respective buckets. And so, of course, the whole shooting match is this, $7.16 million here. And we see kind of parsing that out further. The short-term sleeve is, a small slice of that, full picture, largely weighted in cash and fixed income. And then on the other side of the coin, this long-term sleeve is slightly more balanced, but still conservative in nature. But overall, fairly aligned with, the policy targets, with a couple of minor underweights to U.S. small cap as well as emerging markets, balanced by, a slight overweight to developed international. Just kind of given our broader macro view there. Also wanted to share this kind of growth, in absolute terms. And so kind of looking over, the entirety of the relationship between Grant Advisory and the town, we've seen growth across all accounts, total more than, $2.5 million across, market gains, and income and dividends, which is, extremely positive, kind of given, that, conservative positioning, across both portfolios. And on the performance front, you kind of see, since inception, I think this has been a conversation in previous meetings, the portfolio, which is largely, in cash and treasuries historically, return, 1.2%. But over recent time periods, you see, much more positive numbers as, Eddie and I have kind of shifted, how we allocate from, treasury ladders to, these external managers that are, running funds that we really believe in, their investment process, their teams, et cetera, which has been, a boon, to those absolute growth figures over the past year or so.
Sean, quick question.
Again, yeah, go ahead, John.
how has and maybe it's in a slide coming up, but how has Brown Advisory's performance uh, compared with the standard market indices? What I'm not seeing is how we've done in the last year, what we had at the beginning of the year, and what we had at the end. Uh, Over 15 years, I see that, but um, it'd be very helpful for us to know, and it would probably would help us put fees in perspective if we knew what growth and how it compared with the general market indices.
Yeah, and John, that's a great question. Um, so here, this kind of helps us kind of figure, where we were across different time periods. Now, in terms of kind of broader market indices, we're leaning into, the investment policy statement, um, stated benchmarks. And so for the short-term portfolio, just kind of given it's been largely kind of cash, we've used inflation or the consumer price index as kind of a gauge to see where we land in terms of relative performance. Now, on the long-term portfolio, this benchmark has similarly, served as our barometer for where we fare in terms of performance, stated by the investment policy statement. And so I think kind of against those benchmarks underpinning relative performance, I think we've fared well, both since the inception of the relationship, as well as across these various time periods, shorter and longer dated alike. But always happy to revisit if it's helpful for us to amend the investment policy statement, or just provide that data to show how we're strategically positioned, and kind of have more of an apples to apples comparison. Is that kind of the question you're asking?
Yeah, and I'm not familiar with the blended benchmark.
Yeah. So here we're essentially doing something relatively in line with with what's being done on the short-term portfolio. This benchmark is essentially using the 10-year Treasury as the underpinning for relative performance. But we're always happy to kind of carve out the custom benchmark that would be more closely aligned with these strategic targets as well.
Mm-hmm.
So John and Iris, would it be helpful to follow up with that kind of data for this group to see how we're faring beyond those IPS stated benchmarks?
Well, John's thinking, this is Bernie Krause. One of the things I would like to hear right up front, so we kind of know performance, is what did we do this year? How much should we grow? And, just overall.
Yeah, so happy to jump in here. So the bulk of the assets are, as you know, are in this long-term portfolio here. Nearly the entirety of the $7.1 or so million that we manage for you all. And so here, in the trailing 12, we've been able to to return just over 9% net of fees relative to the nearly 8.5% that we
Okay.
saw the benchmark return. But since inception, we've been out in front of the benchmark nearly 300 basis points, which has been extremely additive for the portfolio. And I think some of the larger highlights, kind of high level, is that our core bond exposure, that fixed income exposure that we're getting from Voya Intermediate Bond Fund has benefited from rate declines and some of the carry that they've been able to capture. And then similarly, we've seen some of that unconstrained and high yield exposure across Metropolitan West and Artisan that were introduced late 2025 be able to capture some of those more idiosyncratic income opportunities. And on the equity side, since inception, we've fared well also. But Eddie and I, we've shifted late last year, similar to kind of what we did in fixed income, to really adapt to the kind of changing market environment, just kind of given we've seen such historical concentration, particularly across U.S. equities. We wanted to make sure that we were kind of managing risk well, while also, giving the town exposure to some of these innovation-driven themes like artificial intelligence through some of that broad U.S. exposure in vehicles like, the S&P core.
Okay.
Go ahead,
If I
Bernie.
could ask one more question here. So if I understood what you said, after fees, we earned 8.5%, roughly.
So after fees, we earned 9.1%.
Oh, okay.
year.
Thank you. That's what I wasn't sure about. Appreciate it.
Right.
Yeah.
Sean, I'm looking at the equities, and going back, it looks like you've been consistently good, until really the trailing 12 months, this last year, where if I understand this graph correctly, and that's always up in the air. You did 13.3% in an area where all the big equities were indices were pretty higher.
No, John, that's a great question. Go ahead.
Is
Sorry
there
to cut you off.
is there I guess the question is there a explanation what has happened in the last year?
Absolutely. Yeah, happy to jump in on that. If you don't mind, I'll go back to this kind of broader market update. And so what's really driven the performance that we saw across U.S. equities has been largely concentrated, and it's really been a continuation of this theme since 2023, but has been largely concentrated in the top 10 names, which over that time span has been all technology companies. So these magnificent 7 players, so Microsoft, Apple, Google, Tesla, the list goes on, have comprised nearly 40+% and been weighted across those names. And on the returns front, those 7 players plus one, which has kind of crept in for the calendar year 2025, drove more than half, of the S&P 500 return.
Mm-hmm.
And so the biggest concern there is, sure, we want to be a part of that run up in markets, but at the same time, that creates, a heightened risk environment, across, for many portfolios.
Okay.
But being a fiduciary, Eddie and I didn't feel comfortable completely chasing there, and so we maintained a level of active management to have more selectivity there, and mitigate some of that risk while also leaning in to a degree to some of that, innovation-driven tech exposure.
Okay. Thanks.
As a follow-on to that question, how does the Dewey investment policy, does that impact any of this?
Can you say that one more time, Bernie?
I say again, the investment policy, our Dewey investment policy, does that impact why we're a little bit lower than indices like you expected for John?
Yeah, that's a great question as well. I think in absolute terms, being so conservatively positioned, it does, impact, the gains that we see, across the portfolios. But, on a percentage basis, these numbers here that you see aren't driven, by that conservative positioning. So even if we were to, turn that risk dial to the right and crank things up a bit, you would still see, this underperformance. This is largely driven to, the underlying allocation across, active and passive strategies. And so here, you kind of see this balance being spelled out. And so you have two passive strategies that are really benefited from the run-ups, as well as, this long-held, separately managed account, a flexible equity strategy, which has served as, our more large cap U.S. exposure, which has really been kind of dinged hard in this most recent time period. Also kind of layered with, another core position, that we leaned into this past fall, which has been a strong, style agnostic, active manager that has done really well. And so, kind of to my earlier point, we want to make sure we're balancing those risks. Now, if we ever have the conversation about kind of shifting, these overall portfolio exposures, is something that we could discuss, but long way of saying, the way we're positioned, being largely conservative, doesn't impact that underperformance. This is largely due to the managers not being allowed to have the same level of concentration as the indices.
Okay, thanks a lot, Sean.
Hey, Sean,
Sure thing, Bernie.
it's Vinny Susi. Just a couple high-level questions or observations. So it looks like we are 70% weighted on fixed assets, correct? 30
Correct.
equity, 29 equity. And then we're not invested in any individual stocks, are we?
No. So
No, so it's all
we're
index funds.
completely invested in strategies.
Okay, that makes sense. And again, just to reiterate, I mean, we have 10 stocks out of 500 in the S&P 500 that are driving half of the value increase, right? And the fact that
Absolutely.
we don't have the appetite to invest individually in any of those 10. We're more of a conservative weighted funds. That's why we're seeing what we're seeing. And so, I mean, from that standpoint, it makes sense.
Yeah, no, you're spot on. Vinny, were you about to say something else?
No, I'm
Sorry
good.
to cut you off.
That was it. Thank you. Thank you for confirming.
Yeah, yeah, absolutely. Yeah, I think the concentration that we've seen is unprecedented. And I think, this bottom chart here really tells the story. Kind of going back to 95, if you look at this little spike here where my cursor is, this is, the peak of the dot-com bubble right here. And if we're comparing eras, which in some ways can be tough, because it's not completely apples to apples, but comparing eras, you can see how stark of, a difference the levels of concentration are. And so that's something that, we, serving as fiduciaries are looking to effectively navigate, but the underlying managers are doing a good job of navigating as well. And I think it's really critical for us to remind ourselves that, in environments like this and in these extended periods of performance, like we've experienced the past 3 years, these extended valuations really do heighten that risk. And it really kind of nails home the point that diversification still matters. We want to be prepared, for things in the event that we see, massive drawdowns. Not to say that we're seeing those types of cracks and fissures in the market or the broader economy at this point in time. I think we've held up fairly well, which is a positive thing, because it continues to give the town, more to draw from. But with that being said, these things do kind of keep, Eddie and myself up at night, and we want to be prepared for those worst case scenarios. I think, job number one for us is effectively to do no harm. So we wouldn't take on the same level of risk, regardless of what our personal appetites may be. Our job is to protect the corpus of the town's assets across both portfolios.
Hey, Sean, it's Vinny again. I play around with stocks a little bit, but I don't know a whole lot. But do you have any kind of stop loss automation out there for any of these funds that, God forbid, there's a crash one day and, our decision would be to get out rather than wait it out? Do you guys manage your funds that way at all?
So we don't have explicit stop losses on any of the strategies. And I think in particular in this scenario here, just kind of given, how we're positioned, there's not a massive need to do so. Now I will say, we're constantly vetting, the managers. And so going through that diligence process, when we invest with them or allocate to their funds on day one, even if they kind of pass, our smell tests and we allocate, doesn't mean the job is done. And so we're constantly evaluating, any new developments with these respective teams, if portfolio managers leave, if analysts leave, if we see them kind of shift their philosophy or approach and we see, how they're investing in the underlying securities or bonds shift, those are things that kind of raise a flag for us. And so I think beyond that, performance is, of course, probably of utmost importance. And so if we see things, shift in a negative direction, whether it's sharply or, a gradual change, that's probably the initial filter that we're using to say, okay, maybe we do need to look away. But of course, there's a confluence of factors that take place before we decide, hey, we're going to, follow our sell discipline and completely liquidate the position and insert manager. So no effective stop loss. But there are a lot of checks and balances that kind of lead us to either moving away or leaning into particular managers.
Great. Thank you for walking through that.
Absolutely. I don't want to completely derail the meeting. Are there any
You know, well,
other
I appreciate
questions?
this, and I think if, you know, maybe we should get through the rest of this pretty quickly, because we do have a pretty full agenda, and then I think with the committee, in our subsequent discussions, we can, if there's things we want to tweak about this presentation format, maybe we can do that and give you feedback of what we want to see next time that might make the presentation a bit easier for us to understand. That maybe that's a good. No, but I don't know. Did you have more slides? I don't know if you were finished yet or not.
Nope. No, we were all wrapped up.
Okay.
I really wanted to kind of close with highlighting that performance that we have for the calendar year, but wanted to make sure we address, you know, the fee concerns kind of towards the top of the presentation and get to any questions. So this has been super helpful, but happy to take any feedback and adjust as needed.
All right. Thank you very much. Does anybody else have any parting comments or questions, or before we let Sean go? All right. Thank you, Sean, very much. And if I have any recommendations, you and I can chat before our next meeting and we can sort that out. All right. Thanks and have a good night.
Thank you,
Sean.
Sean.
All right. Does anybody have any other comments about this now that we don't have Brown with us before we move to the next agenda item? I mean, all right. So if anybody has any recommendations, then let's talk. Maybe that can be an agenda item next time, so we can just keep pressing with today's agenda. Next is the.
Do you want to call for public comment just to make sure there's not any?
Oh, yeah. Thank you, Kate. Is there any public comment?
Is public comment about,
Agenda item A, the Brown Advisory Report.
Yeah, Iris, we don't have anyone here in the room either.
Yeah, sorry. So, okay. So is there a specific comment on the Brown advisor reports, or if not, then, and if it's on a future agenda item, we can wait until we get to those agenda items. So,
well, my comment has to do with the parking fees.
okay, why don't we wait until we get to the budget discussion, because the committee hasn't had a chance to review and discuss that yet.
Okay.
So when we get to that agenda item, we will ask for your comment. Thank you. All right, so now if we can go over our next agenda item, which is is it the January financials, December financials? January financials, sorry. I don't even know what month I'm in. So what, Sheena, do you want to just walk us through the highlights of this?
Highlight is transfer tax continues to just amaze the daylights out of me. It continues even with the money that has got deposited in February for January, continues to exceed. We're looking at being blessed with a surplus at the end of this year that hopefully, under the suggestions of the Finance Committee, the commissioners will put towards, capital expenditures in the town hall, but everything looks to be doing really good.
Great. All right, thank you. Did the committee members, if you had a chance to look at this, does anybody have any questions or comments, discussion topics on our status?
The only thing I see is, and it's just from a historical perspective, is we always seem to have $700,000 to $750,000 for transfer tax. We've been as low as 0, and we've been as much as like 1.1 or 1.2 over the past 15 years. I don't know if this is just your mean mode and medians, or if this is actual. I see that the actuals are 787,950 for this year, which is good. It's 87 over. But do we just pick 7 to 750, or is this actually a real number?
I've been very hesitant on upping it. However, when you look at the budget proposal, I have upped it to roughly 850,000 based on the past 14 months, just on how many houses have sold and the amount that we've gotten because the values have increased. And I think it ends up, there has to be on average 4 houses a month or 4 properties a month that are sold for a profit, for money.
Yeah, well, I know like COVID was very good for the town for buying and selling. And 2007, 2008, when the whole market just took a tank, that was absolutely devastating to the town. So, and then, like I say, you can make 1.1 during the COVID years, and you can make 0 when the whole thing goes to, I mean, absolutes are hard. When you say we made 0, we made 0.
Exactly.
So that's a very hard number to go. We need to focus on that. We're counting on that because it's such a fluid number.
Right.
So, and right now we're in a flow as opposed to an ebb, so. That was my only observation for me.
You've been here long enough to have seen the highs and the lows. Iris.
I don't see Iris. Anybody else want to make comments or observations on the January financials?
Nice job, Sheena.
Yes, thank you very much.
Thank you.
Is there any public comment on the January financials? I'm not sure what I'm allowed to go forward with this, if I can proceed to the next item on the agenda.
Yes, I'm back on. So I don't know what happened. All of a sudden I froze, everything froze, and I got out and got back in and it worked again. So, as with any computer activities, we don't ask questions, we just reboot. Anyway.
So in your absence, nobody else had any comments on the January financials, and there was no public comment on the January financials. So you're back, and I'm shushing up now.
All righty. So then let's. Topic of the day, which is the FY27 updated budget. And Sheena, hopefully you can go through that with us, and I will maintain a stable internet connection while you do that. Thank you.
The few changes that, the largest changes in this was we took everyone that is non-contract to a 3% from 4% pay increase. Also, I found out from the state of Delaware that they're looking at a 5% increase on medical premiums. So I was able to take that estimate from 10% down to 5%. That was another large adjustment. As Zeke pointed out about the transfer tax, I'm looking at $850,000 for this next year. We took just little adjustments throughout, tweaking where we think we can save some money, be more cognizant of our spending. And town manager gave great directions on things and is guiding things very well on this. We then have a couple revenue adjustment recommendations that wanted to present, to ask the committee about.
Okay.
One,
And
yes, ma'am.
what could we, and what, are you basically going down the budget notes that we talked, that attachment?
I just basically was hitting the high points.
Yeah, because maybe if you, it might be worthwhile we can just go down that list of changes maybe, and then as we, and tick them off.
Okay. Not a problem. Transfer tax, as I said, upped by 100,000. That's an increase of 21%. And basically, average income per property we get is roughly $19,000 that we get off of the sale. Rental licenses.
Well, can I ask a quick question? Sorry, about that real quick. When we, when we did our first workshop and we looked at that running average of transfer tax, when we went back, 23 and 24, I believe were pretty low years. I know we've been conservative, but we really are doing so we're going, 150,000 more than what we budgeted last year. I know we've hit it again, but what has changed in the last, in the last couple of months to say we want to abandon that trend analysis and go less conservative? I mean, I understand what it has been over the last year, but when we look at that.
Even if you look at the average from 21 through year to date, the average is 1.1 million.
Oh, okay.
No, the average that we have received
Okay.
is 1.1 million.
But if I recall, and I'm not looking at anything right now, but if I recall, there were some huge outliers. What was the median amount?
Yeah, that's okay. So I've got, I'm just looking, I could share my screen quickly. Let me just do that. I don't know if it's sharing.
Well, Iris is they're pulling that up. I have that presentation that Iris had pulled together on the
Right.
number of home sales. So what was the number, Sheena, that it looks like we're gonna end up with fiscal year 25?
For this fiscal year,
Yeah,
about 1 million.
about 1 million. Okay.
Because we're at 900,000 with what has come in, with what the January sales, with what we have already received in February, puts us at 900, and we still have February and March.
So we got 2 months. Yeah. So at least 1 million, but maybe 1.1 at the highest, right?
Depending on how much, what all sells, yes.
Right. So if we look at that, the average from 2018 to 2025 is an average of 1,027,000. So a little over 1 million. And you're suggesting that we do an 850 budget number.
Right.
So, I mean, I think we're still being conservative, but I think we've always been conservative in that number. We have a reason to believe that next year we'll be down in real estate, or we'll be up, or we'll be pretty much the same.
With
Anybody
this,
want to take a guess?
with this, there has to be 4 to 5 properties that have to transfer each month on
Right.
average.
Right.
Well, I did just, if you look what I did pull up what we did before, and I had not remembered the numbers. I saw, in the current budget, it just had the 23 and 24 numbers as in what you sent. And now as I look back over that historical trend, we did do an average, and we took out the $2 million really super high COVID year. And then the average without that is 903. So based on that, I mean, I think we're okay with the 850. But you know, it does scare me that 23 and 24 are pretty recent and a lot lower. So if stuff stops moving,
Yeah,
Then
we were
that's
what,
a challenge.
760? So we would be, that's I mean, the low was 24, and that was roughly 700.
right, right. So, I mean, again, it's what risk we're willing to achieve or to accept. So, you know, anyway, I just wanted to look at this again and so we have that broader context. And maybe 850 is okay. Looks like Eric has his hand up.
I'll wait till we get to the parking tickets discussion.
Lose her again? There she is.
Okay.
So now we've talked about does anybody have any other discussion about the transfer tax, and are we comfortable with the 850 as a budget number for next year? Or do we want to make another, was this a recommendation or that we want to talk about?
Iris, it's Vinny. Can you pull that chart back up again real quick?
I will comment on this one, Iris, as well. I think a 21% increase year over year is aggressive.
21 based on 700,000 though,
Yes.
not what we're going to come in this year at what, Sheena?
At least $1 million. I'm predicting about $1 million.
So what's the percentage increase, please, over what we expect to collect?
So if we're going to, this year we think we're going to collect $1 million, but we're basing our next year transfer tax at 850, we're actually, it's a percentage less.
Thank you for the clarification.
Sure.
Yeah.
So the transfer tax has a lot to do with interest rates. I think when you go back and look at the rates during some of those years when we didn't bring as much transfer tax in, the rates were a little bit higher. And when you go back and look at the years where the rates were lower, there was more transfer tax. So that plays into it also. And again, nobody really knows what those interest rates are going to do. But for this year, with the current rate, we'll be over 900,000, possibly at $1 million. Correct, Sheena?
Yes.
Yeah. Well, and I guess, we're back to our age-old problem of we're all trying to make our best guess. So,
Right.
and that's always our budget challenge.
Better, worse, or same, I
Yeah.
think it's how we're betting it.
All right, so let's, is that what I'm thinking is, do we want to just kind of go through all of the different recommendations in this updated budget and then what's the best way to get through this? We get through these changes and notes, discuss all those things, and then maybe come up with any recommendations we want to make at the end? Does that make sense?
Yeah, I was holding mine until we got to the specific section.
Let's
but
take
if
them
you-
one line at a time here on the recommendations.
Yeah.
That would be my suggestion.
Okay. All right. So next in the notes then is, okay, we're talking about the rental licenses. And I think all the rental and the commercial licenses, those were both recommendations from the last workshop. That's this, you didn't change those at all. Is that right, Sheena?
Correct.
And then the parking was the same thing as well, correct?
Correct. Except,
No, it wasn't.
the hourly, we were keeping the rate, but we were adjusting the hours to add it starting at enforcement starting at 9 a.m. instead of 10 a.m.
And then why are we stopping at midnight?
The bars close at 1 o'clock, and the amount of parking that is purchased in that hour from midnight to 2 a.m. basically is negligible.
I mean, we could continue it to 2 a.m. I mean, it's only going to be, for what little, if any, money that's brought in will be offset by our parking enforcement ambassadors that have to be out during those hours. But we're fine if that's what the committee recommends. We'll go from 9 a.m. to 2 a.m.
Well, I guess the question I would have is, could we leave the hours the same and we don't put the parking enforcement people out there at that time, but we don't have to tell anybody they're not out there, right?
This is a public meeting.
You just did.
Well, okay,
And
but I mean,
We do want to change it to 9 a.m., I believe, because there is revenue for that hour. It's useful.
Right. And I believe we have public comment on this subject as well.
yeah.
Talk now? Hello?
Yeah, hi, Diane.
Hi.
Hi. I was speaking to you as a resident and as president of the Civic League, but we are very concerned about it. I understand what you're saying, that it's negligible, but I think just the picture of having the bars open even later, perhaps, and having no parking fees at that time is not good. It's just giving the wrong message, whether it's financially feasible or not.
Understood.
Okay.
That's the end of my comment. Otherwise, I think you're doing a great job.
Thank you.
Thank you.
Thank you.
Is there a way to, what's the right thing, form over substance? Is there a way to keep the times to maintain the appearance, but not pay for the parking ambassadors to enforce it after a certain time?
It's possible to just leave it at 2 a.m. and not have the ambassadors out there. It's very tough to have to get the ambassadors out there that late at night sometimes. We do our best. We flex the hours to accommodate the schedules. Parking ambassadors is a very unique type of job. You have to have a lot of patience. And of course, we want them to educate first, and do enforcement second. It's sometimes at 12:30 and 1 o'clock in the morning when you're trying to educate somebody. Sometimes it doesn't work well. And our parking ambassadors do have radios, and they can call the police when necessary. So we can leave it at 2 a.m. and then I can make a decision as town manager talking to our parking supervisor, and I'll weigh the options from midnight till 2 a.m.
Fair play, thank you.
I have a question. What do we do now?
Right now, we ask our folks to get them to work that late. Sometimes we are successful and sometimes we are not. But as far as I'm concerned, we try to have somebody out there every night until 2 a.m.
Okay. So it's really, if we keep it until 2, there's no change.
Right.
That's
in the way we
correct.
operate.
Yeah,
Okay,
we can
thank
keep it at 2.
Okay, Bill.
That's not an issue.
All right.
We're still looking to go from 10 to 9 though?
We're looking at starting at 9 a.m. Yes,
Okay.
What's the increase of revenue to move it to 9 a.m.?
approximately 35,000, approximately 34 to 35,000 approximately.
Do our signs have any time on them right now? Or is it just the date, May 15th through September 15th? I don't think they have a time on them.
The signs do have a time on them. We will adjust that by just putting a sticker. It'll be a minimal fee for the town to change the time to 9 a.m. We will have to order those in advance and get those up, and we'll be able to do that.
And make the adjustment in Park Mobile.
And make the adjustment in Park Mobile, yes.
Okay. All right, so do we want to recommend that the committee, I think we have a recommendation would be that we adjust the parking hours from 9 to 2 a.m. and then and it's a town manager's discretion if it's not cost effective to enforce it at any point in the day, that at the town manager's discretion, then he can decide to do that. mean, there may be other times when it's not worth it as well, right? So.
Thank you.
Does the committee want to?
I think you worded that well, yeah.
Am I allowed to make a motion as the chairman or
No.
somebody else? has to
Call-
mo-
call
okay.
No,
for a
you made a
motion.
suggestion.
So somebody say what I just said.
All right, I'll say, and then the committee will kind of change the time from 10 till 2 till 9 till 2 with adjustments to personnel to enforce the law at the discretion of the town manager.
Second.
There's a second.
All those in favor?
Aye.
Aye.
Who was the second on that?
Eric.
Okay.
All right. Next on the list is too many squares. It's much easier in person when I can look at everything at one time. The next thing, okay, building permits. I think that is the same as before.
Yeah, it was basically bringing it, lowering the amount by $100,000.
Okay. And then the parking tickets, Eric has a question about that, and I don't think we really talked about that much the last time, so maybe we could just go over that one real quick, please.
Basically, I lowered the projected amount. Not saying that we're going to be writing less. Hopefully we will. Hopefully more people will follow the education and follow the rules, and we won't need as many tickets. And that's why it was brought back down.
What was the foundation for the increase in the first place?
Because of this past year, and we had been trending up in the number of tickets that were being written, but hoping this year that the education level, people are starting to understand the rules and are going to follow through more.
So where are you projecting that we end the year with on revenue from parking tickets?
For this year,
Yes, ma'am.
about 650,000.
So the proposed increase is a what percent increase over where we expect to end the year?
It will, putting the budget back down to 400,000 where it was this year.
We don't want to rely.
I'm not reading this correctly then. I apologize. I'm not reading the notes correctly then.
So at the end of this year, we'll be at approximately $660,000 in parking ticket revenue, correct, Sheena?
Correct.
So we don't want to base, we really don't want to base a lot of our budget. We don't want to go back and say we're going to have $500,000 or $600,000 again in parking ticket revenue. We're hoping that the education will bring that, and there's always going to be some parking tickets, but we'd rather see our parking tickets around 400,000 instead of 600,000. And I hope that makes sense because we want folks to come to town, follow the rules, and not get tickets.
Does that make sense, Eric?
I think so.
Well, I think that the other thing I think that from what I got from other discussions of this is that we also, we had a spike in collections this year, and some of that is, we raised the parking ambassador pay, and we had, a different population, and different parking ambassadors may not write the same number of tickets or whatever. It's still a variable as well, and so it's being conservative as far as what happens there.
Yeah, I was looking, what was our trend on tickets over the last 5 years? Sheena, do you know that? I'm looking back at this PowerPoint that Iris did a while back, a couple months ago, and I don't see a line or a slide on that one.
I do not have the amount of tickets that were written right here. I'd have to touch base with our parking enforcement.
Is 400 the normal? in a normal year? And we
Well-
just had an exceptional year at 600?
No, the rate was increased this past year because it was in the past cheaper to take a risk of,
The fines were increased this past year on parking tickets, because remember, it was almost worth it just to wait and see if you got a ticket.
Right.
And not pay at all. So we raised the actual fine rate went up. There was a different type of parking ambassador that was hired this past year because of $19 an hour. They were a little bit more mature. They were out a lot more up and down the streets than some of our others that in the last 4 years that I've been here. If we end up getting that same dynamic, that same type of parking ambassador, we may end up with some higher numbers than 400. But we really don't want to be known for trying to reach $600,000 in parking tickets.
I understand that, but I mean, if the revenue trend is what the revenue trend is, that's what it is, whether, people play by the rules or they don't. I mean, no one likes getting a parking ticket. I agree, but whatever the revenue comes in at, that's what it is. I'm just trying to, I always go through that thought process. Are we going to have a better year or worse year? Or are we going to be the same? If that depends. If we look at a trend, I think we know, when was last time we hit 400,000? Was that always the low, or I don't know.
And Paul, I'm looking at the operating budget that was shared last meeting. We were at 145 in 23, 264 in 24, and 301 in 25. Now we're north of 500.
You have to look at the number of tickets written, because with the fees going up, that skews it. I can get the number of tickets that are written each year for the past 5 years. And that would show a different trend. You can't just, when parking tickets, with the fees being low, be looking at the same information.
Okay, that makes sense.
Yeah. I'm just trying to justify a 30% discount or 30% downtrend in parking tickets.
This is increased from past budgets, and it just doesn't, it's not a good look for us to try to balance our budget based on expecting to write tickets to people.
Oh, 100% agree.
Or speeding tickets or any other type of ticket.
That's not how I want to, that's not how the budget should look.
And I understand the public wants enforcement, but there's a cost of doing that. You don't want to make people mad at us.
No.
So
All right,
this is
so-
increased.
So I think that takes us through all of the major revenue changes. And then you want to talk about, and then expenses. You can go down those real quick.
The expenses, the major change is the seasonal beach patrol wages. The projection was reduced by 75,000. Based on a revision of clocking standards and a deeper analysis of the 2025 hours versus prior years. We had far more hours of coverage of the beach, which was great because it made sure that everybody was safe. Captain Fritchman does a great job of protecting the beach, and he made, that's shown this year with the extra hours. The town manager and I are going to be talking with Captain Fritchman about the number of hours required to keep the beach safe. And of course, there will be times where stuff may happen and he'll go above the number of hours projected. It's going to happen, but it means the town is safe. But other than that, the other changes were just minor. As I said, the reduction in non-contract employees down to 3%, and the decrease in the benefit costs from 10% increase to 5%.
Okay, and then
I have a question, please.
go ahead.
I neglected in my earlier questions to thank you once again this year for This is a lot of work. I used to do this stuff, and you guys do a great job with this. So I did want to remember to thank you all for that. Would you please, and I know you sent the information. I didn't find it. I'm hoping you have it at your fingertips. So we're projected to end the year at what kind of expense for the seasonal beach patrol raises versus what you're planning to budget for next year?
The seasonal beach patrol, they're finished for the year.
Yeah.
How's everything going?
They're,
Oh,
they,
good.
they finished at,
I'm trying,
Thank you, Kate.
402?
with overtime, 538,000. And we're projecting, this next year, keeping the same staffing. What I do is I take the same staffing, no new people, so that means all wages go up by a quarter an hour, and keeping this, but trimming the hours to a more standard.
So we looked at the hours for the last 4 years. This past year, our hours with the number of lifeguards on the beach was higher. And of course, we have a time clock now that makes life easy. When I say life easier, the job easier for Sheena when it comes to looking at the lifeguards and their hours in and their hours out, whereas before it was done manually on a clipboard that every day somebody would bring over to us and or weekly bring over to us. And now we have it on a time clock here. They punch in and out. We are going to be doing some adjustments on when they can punch in, when they can punch out. The day for them starts at roll call at 9 o'clock. We're not going to allow them to punch in at 8:35, 8:45, 8:50, or 8:55 this year. It's going out in their welcoming packet that they will be punched in by 9 o'clock when they have roll call. So this was a learning lesson for us this past year with folks that punched in a little bit earlier, and those hours did add up for us. So I hope that helped explain some of the hours and why we were over this year compared to other years. Hope that answered your question.
Thank you. It does partially, though I want to go back to the earlier comment and some of the earlier discussion. I'm concerned, I guess, also about the optics of balancing our budget by reducing the beach patrol hours.
We're not reducing the coverage. We had,
So they get on the beach at 10, and they get off the beach at 5. That coverage is going to remain the same. It's a matter of when they're clocking in earlier and clocking out a little bit later. I hope that makes sense.
If that, I'm reading the notes. The notes say revision of clocking standards and a deeper analysis of summer 2025 hours versus prior summer hours. I understand, and you've done a very good job of explaining the clocking standards, and that will take some of the hours off the board. I get that. I'm curious about the deeper analysis of summer 2025 hours versus prior summer hours.
there was an extra 1,000 hours of coverage over prior years, over the average of prior years. Town manager and the beach patrol captain are going to be discussing to find out if this is a new trend that we need the higher hours. And if so, we can adjust as we go along. If it was, hey, this year just had a lot of situations where we needed more people on the beach, then that's where we are. It gave us a point with the new clocking system. We're able to do a better comparison of time and number of people on the beach at, guards and things like that.
I have a question or an observation. I know Bill can probably ask when it comes to Todd, but a couple times under an old town manager, they would do, not every street was manned and not every street had a lifeguard. They did sharing and they were 2 or 3 streets apart per lifeguard stand. And I guess maybe is the 1,000 hours extra that we had, now that we've combined them, we've had a lifeguard on every street versus we stretched them out, or?
No, the Todd's been manning the streets for the past couple years the same way.
And this may have been after Labor Day and just prior to Memorial Day. I don't even remember off the top of my head, but I knew we had a period where we weren't at every street.
Stretched.
No, I know during the season that he had the same coverage. It's
Okay.
just, we had far more guards that wanted to work and that, you know, the coverage was needed, apparently.
Okay.
So is it safe to say that this is basically a challenge to the beach patrol to keep to the same hours that they've had in the past where possible, and we're gonna, and so you're just really looking at where they can do that to get back to that normal level.
Right, but if the need is there,
But
then.
they'll still do it. Right. So we
Yeah,
may,
if the need is there, there's going to be coverage. We would never, ever think of cutting the coverage for this beach.
No, but you're just saying, like, if there's 5 people that show up a half hour early every week or every day, and that's 5 hours, you know, and that adds up over 13 weeks in the summer.
That's not gonna happen
Yeah,
this year.
that's what you're saying is,
Yes.
yeah,
Right.
okay.
okay. Do we have any more questions on the expenditure assumption changes? We've got vehicle repairs were decreased to the historical average. We have beautification was eliminated. And
So
then
if I could just say that on the beautification there, what in the past, in the 5 years that I've been here, we've hired a contractor to cut the large areas. That would be on Bayard Avenue from Bellevue up to Route 1 and on King Charles from basically Chesapeake Street down to 1 and 1A. This year, we are not going to do that. This year, we are going to have our own maintenance people cut those areas. We're going to have them come in a little earlier and get those done and get those areas cut and policed up with trash. So we are going to save some money this year doing that. We're also going to have them do the weeding on the center island instead of having the contractor do that also. We're going to try to do that this year ourselves and not bring an outside group in.
Okay, thank you. All right, so I think that's, so that covers the major changes, and then do we want to go over now the bottom line and look at how we're handling the set-asides and make sure we're comfortable with that and with what the total recommendation is now, and so that we can recommend to the commissioners for their meeting on Friday.
I know you were aware of Commissioner Persinger weighing in on some of my numbers. I spoke with him today. We had, when I was calculating the rainy day and the unassigned set-asides that were needed, I was including the set-asides from building permits and the hotel lodging tax. And Commissioner Persinger says those, his calculations did not include those. So when you take those out, we end up actually in the black if all goes well.
Right. And so with the budget, and I sent everybody the revised version that Gary sent with his new calculations, and so it looks like, you know, if we accept these changes, we have a small surplus in the budget, and we're in really good shape, so that all of the things that a lot of the challenges that we identified in the workshop, you know, we were able to fix those with the changes that we just went over.
Which attachment do we see that in, please?
I sent an email
You know, there are 6 attachments. I'm saying which one of those are we supposed to be looking at?
I sent
Apologize for interrupting.
the one I sent at the later this morning. It was earlier today that had Gary's comment and budget analysis. Let me see if I can pull that up. Here we go. I can let me share my screen again since I have it right here. Where's the share button? There we go. All right, can you guys see that?
Yep.
And so what we're looking at here then is just at the bottom. And between Sheena and Gary, if you want to walk us through this real quick and then make sure everybody understands where we're at.
Okay. When I had done it, I included the 2 set-asides from the building permits and the hotel lodging tax in the calculations for the rainy day. Commissioner Persinger did his calculation based strictly on the total expenditures for 2027. And in doing so, that reduced what was needed. And when you offset it against what we have in those accounts so far currently versus what is predicted for the shortfall for the next 2 months, it comes out we're in the black. And we don't need to set anything aside for the prior year at this point, next year.
Right. So, I mean, it leaves you with a surplus, a projected surplus for FY27 of 155,722. And then if you look just at the surplus that we would expect as of 3/31/26, that's projected to be 634,232. So there's ample room there. If things go as projected here, there's ample room there to cover projected expenditures, and there's some other options to talk about as well for that surplus for FY26, as well as the projected surplus for FY27.
Sir, if I can just say that back to you so I make sure I understand. So you're saying we're projected to end the current fiscal year with around a 634K surplus.
That's correct.
Your green and red has confused me. I'm used to seeing surplus, not in red. So that helps me.
It should be in black. Yes.
Very appreciate that. And then you're saying that carryover from the current fiscal year into next year, plus projected at least break even or 155K surplus. Again, it would be in black. That in your analysis, that is a reasonable cushion that allows us to accept the FY27 budget as planned. Is that understanding? Is my understanding correct?
Your understanding of the numbers is correct. Yes.
I appreciate the caveat. Thank you.
Okay, so does anybody have any other comments or questions about the overall budget? Are there things, Sheena, Bill, Paul, Elizabeth, that maybe we should be discussing that we didn't with all these attachments and everything?
I think it looks good.
Yeah, I think you fit everything.
Yeah, because I mean, a lot of this stuff, we had a lot of attachments, but they were really updates of stuff that we went over in detail at the workshop. So I don't think, I've tried not to replow that ground. So, all right. So
can
would
you
you
read?
like me to carry forward to the commissioners that you approve of the budget notes with the exception of the changing the parking hours from 9 a.m. to 2 a.m.?
Iris,
Yeah,
if you could
somebody-
resend Gary's analysis, somehow I didn't see it. I apologize.
Okay. Are you saying I did not send it or I did?
I have no, I don't know. I missed it. So I'm just asking
Okay.
to resend.
All right, I will resend it. Yeah, let me see what happened. Because maybe I don't have a good stable connection whenever I sent it earlier either. Okay, so can we have a motion to approve the budget changes from the workshop as well as the set aside with the set aside calculations done by Gary and with what we already approved regarding the transfer tax, sorry, not the transfer tax, sorry, the parking hours. Who wants to
I'll make
formulate a
that
motion?
Motion. I'll motion.
Second.
I can't move it. Somebody else has to say what I just said and make that
There was a
motion.
motion and a second. You're good.
Oh, okay. Thank you.
Call the vote?
All in favor?
Aye.
Aye.
Wonderful. All right. Any last comments from anybody before we adjourn?
No, I'm just gonna reiterate what I think was Eric said, is thank you guys, Bill, Sheena, everybody who put this stuff together. Phenomenal job. Thank you.
Yeah, I'd like to point out
Same to
that
you, Iris. Appreciate it.
Commissioner Persinger and the mayor did a lot of work on this, and a lot on, late at night and during the day. So thank you to both of them also.
I have one comment to make. I don't know if everybody's aware, but today is Iris's birthday.
Oh, really?
Happy birthday,
Well, happy 21st, Iris. Happy
birthday,
She
birthday.
Iris.
chose
21st,
to
thank you.
spend
All
her
right.
birthday with us here for the last hour and a half.
Now we have a dinner reservation at 7:30. Don't worry. I'll wipe this out of my mind soon.
Well, thank you, Iris.
Yeah, and I think, and just for everybody's situational awareness, I think now, the budget has to get approved at the next, probably the next meeting. So on Friday, the commissioners will be meeting, and hopefully we'll approve the budget and that'll be that. So I don't think we'll have any more meetings on this budget cycle. And then our next meeting, unless something else comes up, will probably be our next quarterly Brown financial review. And then all 4 documents as we get them. So, but thank you so much, everybody, for participating in this weird hour, and reiterate thanks to Sheena, to Bill, to the commissioners. As I know there are a lot of iterations done on this, and we, from where we were at the workshop and the challenges we issued, we saw the end result on one piece of paper, but I'm sure that they looked at a whole bunch of other things and really do appreciate all that. So thank you. Unless there's anything else, we can have a motion to adjourn.
Motion to adjourn?
Wonderful. All those in
Second.
favor?
Aye.
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 Happy birthday.
Happy birthday.
Happy birthday,
Thank
Iris.
you.
I will
Thanks,
Thanks,
everybody.
everyone.
Thank you.